what this is indicating, which is another shift, though this is one that happened, June of 2022, is that the markets no longer trust the Fed and they're fighting it. They don't believe them. This is dangerous.
In her latest video, she's pulling back the curtain on the market's most critical shifts. And trust us, you can't afford to miss this. As she breaks down everything from the Federal Reserve's balance sheet to the mysterious world of interest rate adjustments and their surprising impact on inflation. With every twist and turn, she's arming you with the knowledge and insights you need to stay one step ahead of the curve. Don't miss out on this game-changing journey. Tune in now and get ready to supercharge your financial savvy.
This is so critical that I actually had something else planned for today, but I had to talk about this because I'm always talking about pattern shifts and how when you see a pattern shift, you don't even have to understand what it's about, but what you need to understand is that things are changing to the good or to the bad, and we'll talk about where we're at with it. Because the first thing that I have to show you is what's happening in the markets and this huge shift. This is so big, okay? So what do we know? We know that what you're looking at is the Federal Reserve balance sheet, the blue line is the Fed balance sheet, and the red line is the S&P 500. And you can see how since 2008, they kind of are working much in tandem. But there is now this major shift that's happening. Could it be like it is over here? Maybe, but I don't think so. I think this is much bigger because there is a decoupling that I'm watching in the global central banks' behavior with interest rates. Some are raising them, some are lowering them. And so we've got some things coming up with that. And I think this might have something to do with it. So just so long as you're aware that how synchronized this was starting in 2009, in 2023, that started to shift. And here we are. This is the end of 2023. But hey, stock surge, even as blowout jobs report, which was shocking to many, pushes some Fed officials to consider another rate hike. So we've been wondering, when are they going to lower the rates? When are they going to do the pivot? But inflation and the job market is proving stickier than what they anticipated. But what this is indicating, which is another shift, though this is one that happened, June of 2022, is that the markets no longer trust the Fed and they're fighting it. So the Fed says, well, we might even raise rates, which would not be good for stocks because they need more debt, right, to keep buying their stock certificates and support the stock market. Markets are now fighting the Fed outright. They don't believe them. This is dangerous. How dangerous is the debt wall if rates go up and they have to refinance that debt in higher interest rates? Well, let's see. We are about to see how big the zombie corporations are, because we definitely do know that interest rates and the markets, it's going to have an impact on the bond market, the stock market, and the debt market is the biggest market of them all, especially since this stuff is based on debt and the ability to grow more debt. So let me tell you, if you don't see the danger, I hope you see it after this, because here is another disconnect between Fed funds futures and the S&P 500. And the stocks have brushed off the repricing of rate cut expectations as, are they going to do 2? Are they going to do 3? Hey, they might actually be raising the rates. Ultimately, they are going to drop them again and start with their money printing machines because they don't have any other tools. But this is such a big deal. And that just happened. That just started the decoupling in January. So like the chart that I showed you in the beginning, Fed funds futures, so that's the interest rates, and the S&P 500. Here it was correlated. It's been correlated since the Fed said, we'll let you know, forward guidance, we'll let you know we're going to do so Wall Street can get into position to take advantage of it. Well, pay attention to this pattern shift because it is breaking down and it is showing you that this system is breaking down, no longer correlated. I thought it would be hard for the market to challenge the Fed on the hawkish side, but apparently it is willing to do so. So I'm trying to show you that we saw that the markets lost confidence in the Fed in June of 2022. They are fighting the Fed now. And guess what? With all their derivatives and all their shenanigans, can they overwhelm the Fed's ability to print our way out of it? I think they can. So let's take a look at what's been happening with gold. Because gold has broken that top, as we've talked about. Now remember, this is just the spot gold market. Breakout was actually September back in 2021, right? From a high that it was created back in 2013. But then they suppressed it, they pushed it down, they pushed it down, they pushed it down until they couldn't do it anymore. A triple top is almost unheard of. We had a quadruple top over here, but just for a second till we had that breakout. Okay, that means that's going to go much higher. But in the physical only markets, that's this market, except that this is rarity. So this is where you might have an ounce of gold go for 15 million bucks. Who can afford that? The 1%. The guys that are driving this bus. That's who can afford that. And look, they had their breakout back in January of 2022. You think they might know something before you? And what are you looking at? Are you looking at the physical only market? Or are you looking at the spot market, which is easily manipulated? So what do you trust? Do you trust a contract that costs virtually nothing to recreate and make it appear like there's a whole bunch more gold and silver than frankly ever exists? Because when you're going into here, this is finite. Contracts, they're infinite. They can do as many of those as they want to. But what about silver? What's happening with spot silver? Well, here's the spot silver chart. Remember, we looked at it last week and we saw that wedge. And guess what? It broke above the wedge, right? So what happens when you suppress a price, you suppress a price, you suppress a price? When it shoots above in a wedge, like a piece of cheese, when it shoots above, the next most likely outcome is going to technically keep going up. But yet neither one of these actually indicates the true fundamental value of an ounce of gold or an ounce of silver. It's a flippin' bargain. But technically, you will see the spot market go higher. And what is our good friend Larry Summers, and I say that out with tongue in cheek because you know Larry Summers is not my favorite person. He had so much to do with allowing the derivative markets to expand and letting the banks take over. So he's not my favorite person, but hot jobs data, neutral Fed rate, much higher. What is the neutral rate? The neutral rate is the theoretical level for the Fed's benchmark that doesn't create inflation, it doesn't stimulate, or it doesn't restrain growth. It's just a theory. They don't know where it is. They think it's 2%, and hence they're pushing for that 2%. But the reality is it's probably much higher than there is no flipping neutral rate. I mean, give me a break. It's just what they like to say so that it makes you seem like they're doing something and they know something, but they have no idea. This was a hot report, the employment report, that suggested, if anything, the economy is re-accelerating. Well, if it re-accelerates, what does that exactly mean? That means more inflation. If there's more inflation, then in theory, the central bank really can't lower rates. In fact, if inflation goes higher, noticeably higher, because obviously all they've done is slowed down the price increase. They haven't eliminated it because that's not part of the plan. So what that really means is that they're going to have to raise rates. They can't lower them. What is that going to do to the entire market? Do you want to take that chance and not be prepared? I mean, you got to do what you're comfortable with, no matter who says anything, right? No matter what I say, I'm doing what I'm comfortable with. Food, water, energy, security, barterability, wealth preservation, community, and shelter. I got it done, and I'm not as done as I'd like to be. How about you? Where are you in this process? Because there's really no neutral rate. The goal for the central banks is to have inflation go down slow enough that you don't notice and you agree to stay put. That's what when they talk about price stability, it's on you. It's not that the price stays the same. It's that you don't make any changes to your lifestyle because of it. They still get your purchasing power.
Don't let the fire die out. Keep that financial flame burning bright with Lynette Zhang's electrifying insights. Keep the sparks flying in the comments below. Share your thoughts and join the discussion. Don't forget to smash that like button, subscribe for more mind-blowing content, and ring the notification bell to stay in the loop. Until next time, keep the flame alive and keep conquering. Thank you.